Hello everyone, I am Sandeep Abange and today I will tell you if you should subscribe for the upcoming IPO of Indigo Paints or not. Starting with the IPO details, Indigo Paints is planning to raise Rs 300 crore via fresh issue and offer for sale of up to Rs 58,40,000 equity shares. With this, the total size of the IPO comes at around 1,168 to Rs 1,169 crore. The IPO will open from 20th of January and is set to close on 22nd of January. The price band is fixed at Rs 1,488 to Rs 1,490 per share for a lot size of 10 shares per lot bid. Indigo Paints was started in the year 2000 and since then it has become the fastest growing paint company in India. It grew its revenue at a CAGR of 42% between FY10 to FY20 as compared to mere 12 to 13% growth by top 4 paint companies in the same period. This robust growth was achieved in a highly oligopolistic market on the back of its multi-pronged approach of introducing differentiated products to create a distinct market for itself. Indigo was the first company to introduce category creator products like metallic, tile coat, ceiling and floor coat emulsions. Currently, 28% of its value sales come from differentiated product categories. Indigo uses bottom-up approach to tap into newer markets as it enters into tier 3-4 and rural markets first to capture large base of dealers and then it moves to metros and large cities. The current dealer count of Indigo stands at around 11,230 which has grown at a CAGR of 10.4% from FY18 to FY20 as compared to 70,000 active dealers of Asian Paints in FY20. Coming to the industry overview, the Indian paints industry is still quite underpenetrated as compared to not only developed markets but also Asia Pacific countries. Compared to the global average consumption of approximately 14 kg to 15 kg per capita, the per capita consumption of paints and coatings in India is quite low, indicating a significant opportunity for market penetration in India. The decorative paint market constitutes around 74% of the total sales, and the rest consists of industrial paints. Factors like rise in urbanization, growth in popularity of branded paints, shortening of repainting cycle from 7 to 8 years in 2010 to 4 to 5 years in 2019 are leading towards increased spend on decorative paints in India. Going forward, the decorative paint market is expected to grow at a CAGR of 13%, while the industrial paint market is expected to grow at a CAGR of 9.9% by 2024. In terms of competitive landscape, the Indian decorative paint industry has historically been dominated by 4 players: Asian Paints, Berger Paints, Kansai Nerolac and AkzoNobel, which had an aggregate market share of 65% in 2019. As the industry presents significant entry barriers, these entry barriers include the development of an extensive distribution network through long-term relationships with dealers, the ability to set up tinting machines with dealers, as well as significant marketing costs and the establishment of a distinct brand to gain product acceptance. To enhance its brand equity, Indigo has engaged with MS Dhoni as their brand ambassador. Indigo also stands out when it comes to installing tinting machines as it embeds internal computer in the tinting machine itself, as other players need to rely on external computers. But there is one aspect where it spends significantly, which is advertising. Indigo has strategically undertaken brand building initiatives to gain visibility in a highly concentrated paint market by gradually increasing branding and marketing expenses. The ad spends represented a massive 12.7% of their revenue in FY20 as compared to 4 to 5% of top paint companies. High advertising spends has helped develop brand equity in a market that has historically been dominated by companies that have invested considerable resources on developing their brand over several decades. But if these spends continue to rise higher, then it can be a red flag going forward. However, the management has stated that its ad spends will reduce in future. Coming to its financials, the company has grown its revenues at a CAGR of 16% since FY18 to FY20 and 42% between FY10 to FY19 as compared to the range of 12% to 13% recorded by the top 4 paint companies in India for the same period. Similarly, its profits have grown at a CAGR of 55% from FY18 to 20 as compared to the range of 10 to 13% recorded by the top players. It has also maintained a decent PAT and EBITDA margin of 8% and 15% as of FY20 compared to its peers, which range from 7 to 23%. Despite COVID-19, its revenues have grown by 17% between FY19 to FY20 against the range of -8.8 to 4.9% recorded by the top 4 paint companies in India. It also clocks an average ROE and ROCE of 17.5% and 36% for FY18 to FY20 as compared to its peers, which gave an average return in the range of 25 to 35%. Furthermore, the company has more than doubled its operating cash flows from FY18 to FY20 as it continues to reap benefits of its aggressive brand building strategies. Also, currently Indigo has a negligible debt to equity ratio of 0.1% as of H1 FY21. And post the IPO, the company is planning to repay all the debt and become a debt-free company. Coming to the company specific risks, firstly, the Indian paint industry is dominated by few major players with well-established pan-India presence, and they have also developed a significant name in the market. These market entry barriers are difficult to penetrate and hence poses a big risk for any new company. Secondly, Indigo has historically derived significant portion of its sales from South India, which currently contributes 46% of its revenues. Any adverse impact in this region may impact the company's revenues significantly. Thirdly, paint companies rely on distribution networks to derive their sales, with well-established players such as Asian Paints, who have strong relations with distributors and who have already set up a massive network since years. It will be a challenge for Indigo to establish a same match and reach the level of Asian Paints. To conclude, Indigo Paints has consistently tried its best to chip away market share from the top paint makers. With near zero market share in FY15 to around 2.5% market share in FY20 in decorative paint segment, shows the commendable work the company has done to penetrate in a highly concentrated market where novice players haven't even dared to enter. But it is currently commanding a high valuations at a PE of 140.6 times as compared to its major peers, which are currently trading in the range of 125 to 59 times. Considering its high valuations, we recommend investors to subscribe to this IPO for listing gains only for now. Thank you.